Welcome to a new market update, and today it's December 1st, which means that the giveaways have started. If you want to join the giveaway, check out the link in the description beneath, and today we're starting off the giveaway with giving away 2 times 0.01 Bitcoin. Current value is around $570 per winner. If you want to join the giveaway, we're going to do it for 24 days. Do not forget to check out the link in the description beneath. What we also can see is that the price of Bitcoin is relatively stable at this point. There's still no conclusion. We're going to dive into the actual price action of Bitcoin today, and I try to explain a little bit what I've been saying the past few days with important levels to watch and how I'm going to execute on those. And we're going to look at an altcoin that has been doing well in the past weeks but has been correcting heavily, in which we're going to look at some entry points there too. Before we're going to continue, do not forget to subscribe beneath, also like this YouTube update, and do not forget to check out our Twitter and Instagram where I'm posting daily content on the markets. So when we're looking at the price action of Bitcoin at this point, and especially yesterday, we saw a heavy volatility kicking in because Jerome Powell has said that we might be getting hikes of the interest rates, which is kind of weird because we're currently still living in a COVID pandemic in which money printing has been done to actually save companies and to help the economy survive. And because of that fact, and because of the actual money printing, we've seen inflation start to increase heavily. And because inflation has been increasing heavily, it became a central topic for society in which literally everyone is currently investing into something. Recently, we've had a survey in which people between 18 and 30 years old in the Netherlands said that 42% of them are currently investing into stocks, crypto, or anything. I do not know whether that's actually a good cause right now, but the statement yesterday about the fact that they're going to hike or they want to taper at some point in time next year, you should realize that when everyone is discussing inflation, and when literally everyone is rushing to buy a house for yourself, you should be aware that we might be getting to the end of the actual cycle. If you go back in history, and it didn't happen too often, but how is inflation going to end? It can be through hyperinflation, which is what we're currently seeing in Lebanon and what we're seeing in Zimbabwe and all those other countries in South America as well. That is an option, but for the euro and the dollar to actually get into hyperinflation, it is the last resort. So if you want to have everything into hyperinflation, or if you want to, if you're expecting the euro and the dollar to go into hyperinflation, you're actually saying that literally everything on the world is going into hyperinflation. The last currencies that will do that are the euro and the dollar. So I'm not expecting that to be taking place. And then next, if the interest rates are going to hike up or the yields are going to crawl up, which is having an impact on the mortgage prices or the mortgages for people that want to buy a home for yourself, I think the actual outcome of this market is actually deflation. And you have to look up in the 1930s if you want to know more about that. But it seems more likely that we're going to have deflation rather than inflation, as we're already living in inflation for years. And now we get to the point where the mass is also getting into the inflation topic, while we have been living in this for like 20 years already. So why are we going to get deflation, or what are the chances that we're going to get deflation? Well, a very simple equation is the following. If an interest rate is 1% and you can pay 5,000 euros of interest per year, you have the ability to buy a home for 500k. If the interest rate increases to 2%, you are able to pay the exact same amount of interest rate per year, which is 5k. The housing cost you can pay or you can afford is decreasing by 50%, so you can only afford 250k. So that is very simple, as in most of the buyers in the Netherlands right now are actually starters, and starters have the issue that they are not able to buy a house and they have to exceed their own debt limits to actually get one. But once the interest rates are going up, the underlying collateral is going to lower its price heavily. It works on real estate for starters, so the actual demand will dry up heavily when it comes to real estate. But holders of a real estate will also be paying higher amounts of interest at some point if they have variable. Short-term loans for companies will have the same. And why are actually stocks running? Because of the fact that interest rates and yields are so low and the value of money is diminishing over time. The moment that yields are going to run up and the US dollar is going to show some more strength, institutional investors will be more likely shifting towards the dollar or towards assets that are risk-free. So that will cause another crash down on the equity markets even more. So we're going to dive in that topic in the coming year way more often, as I'm not one of the group that says we're going to keep inflation for the coming years. I expect it to have a drop down. But yesterday we've had that Jerome Powell news, and we had some short-term volatility which was causing instant panic in the markets. But when we're looking at the prices at the moment, we can actually see that Bitcoin is just consolidating and that you shouldn't be worrying about any short-term price volatility, especially when Powell is speaking or when the options are expiring. You should be focused on price action in itself, and price action tells you everything. Let's head to the charts in which we're going to discuss those levels. So when we're looking at the price action itself, we can say that we've had a deviation below the crucial support. So we've had this deviation below 56k, and we've also concluded that we have a crucial level for support at 56 that we're actually needing to hold here. That's why during the price action over here, we've stated that the moment that Bitcoin breaks back above, the clear long entry that you want to look for is a support resistance flip of 56k, and that is actually what is taking place at the moment. So if you want to get into any long entry, you should be filled at this moment. When we're looking upwards, that's the first topic that I want to discuss with Bitcoin here, we can see that we've got a few interesting resistance points that we have to crack to. We've already seen a rejection at 59, as we can see here. We've also got a rejection at 60 or 59.5, and we've got one at 60k, which is the crucial barrier here, as it has been acting as support many times. So the moment that we're going to test this high once again and we're breaking this recent lower high, it will probably cause a chain reaction on the markets, as all those stops above those levels will be taken out, in which shorts are getting stopped out or shorts getting liquidated, and because prices are getting above that crucial barrier, we most likely are going to get an acceleration from people that are also buying the breakout, through which I would not be surprised that if we are getting some sort of consolidation here and breakthrough, we are getting all the way towards 63k within one go. That is the upper case at this point, and that upper case lives as long as Bitcoin is going to sustain above 56k. And there were some questions about the fact that, okay, why is 56 so important right now? That if we're going to lose it, we most likely nosedive even further towards this support level at 50k, as we've marked one here. We can see that this is a very important level to look at, also psychological. Well, if we're losing 56k, the price action itself says, okay, we've been deviating below the support already. Now we are testing support once again, but once we drop beneath 56k, there are not enough buyers to actually grant that support once again. So we should be looking for the lower level of support to be taking place. And if, as we have been deviating here already, it's very likely that we're going to drop further than this support zone to squeeze all the longs beneath the recent low. And then I'm assuming we're going to get to 50k. That is the downward scenario. Right now we're still in the middle of a range through which you shouldn't be rushing into positions too much, despite the upper or lower range construction. And I've said yesterday already, 56 is a level to watch, flipping 60 is a level to watch, and anywhere in this region, I would not be looking for shorts too much at this point anymore. The altcoin that I wanted to discuss is EGLD at this point, which has been accelerating towards the 2618 Fibonacci level, which we concluded that we might be getting a rejection there, and we can see that we're actually getting one, through which we are seeking for ourselves for support to be taking place. When we're looking at the daily time frame, and if you're looking at this chart overall, you already know that you should be taking profits when something runs that heavily, especially with such a vertical move, not making any retests at all of previous levels. In this construction, you can see all those retests taking place. You should definitely be seeking for any take profits to be taking, or from your portfolio to be handling there. This is the higher time frame swing trade level that I'd be looking at if we get towards EGLD at this point. When we're looking at lower time frames, we've seen a beautiful bounce taking place from 390 all the way towards 440. And now we're getting into a land where we might be looking for some long entries once again, lower time frames. So you know that this is the higher time frame sweet spot swing trade opportunities, but right now we're getting into those previous high levels in which we could be granting ourselves a long entry as well. Where can we get to? Well, we've got a clear resistance at 390, but when the 390 level has been breaking upwards, I think we can even get a run all the way towards $420 on EGLD at this point. And then the question becomes whether we're going to reverse this trend and make a flip of this level, which we should be doing with Bitcoin as well, which we are with 56k. And if that is going to happen, we're most likely going to see continuation taking place on EGLD as well. But here we had take profit. Right now we are into entry zone. I hope you have enjoyed this update. I'll be back later today with another fresh one. I'll be doing the requests on Twitter, as today is request day. Don't forget to subscribe beneath and like this YouTube update. I'll see you again soon.